What's going on, everybody? It's your boy C-Zar, and we are talking about XDC Network today. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. All right, so we're looking at the price action here on a daily basis. You've had quite the drawback from a high of about 10.5 cents, 11 cents there, all the way down to about 6.4 cents. Beautiful move down. Very nice and tight consolidation, right? If this were to be any kind of pattern, it to me would seem as if it's a bull flag, right? It seems like a bull flag. It looks pretty picture perfect. If this were to be a bull flag, and I'm sure I did this in my last video, but I just want to, it's been a second since I've talked about it. It's been at least like a week, I think. Let's just see where this would take us. If this was a bull flag, the way you'd measure it is you take the height of your bull pole, you put it at the base of your flag, right? And then that projects out. Your measurement would be all the way up to 26 cents. So ideally, this would be your measure move if this was a bull flag. The idea would be that once you break out and you move higher, you won't stop until here. That'll be your next significant correction phase, right? Not saying that it won't be like you won't pull back a little bit along the way, right? You can do that, but just before you have any kind of significant correction like this or more, bigger, it wouldn't be until here. That's the measure move. That's the idea. I like to use the word idea because it is just an idea. Measure moves are not requirements. Oftentimes you actually fall short of a measure move or you even break through a measure move. It's just an idea. But oftentimes when you do fall short, it's around the measure move. If you do break through it, it's around the measure move. So it's a good idea, right? Let's see if with this idea, if we can run with it and make sense out of it, right? So assuming that this is your low, and first let's just see if that is a good low right there, from a relative low here to a relative high there. I mean, dude, you barely missed your 382. This, you guys, this has actually happened. This look here where you went just above your 382, you reached for it, but you couldn't get there. That's a really bullish look, you guys. The 382, it's almost inevitable to hit it and even go a little bit through it. But whenever you find that you can't reach it, you're trying, but you've got this little gap like this. You could say it's a coincidence if you want. I don't think it's a coincidence. There's a lot of trading algorithms. There's traders, professional day traders who are all aware of the 382, right? When I say algorithms, I mean trading bots, right? Sophisticated trading bots, they base a lot of their moves off of the 382 and the golden ratio itself, right? And other fibs too, depending. But they're all aware of this area. There's a lot of attention on this area, not just based on the 382, but look at this last area of resistance here. So there was so much attention, you couldn't even get there because there was so much buying pressure, right? You couldn't even get to the expected areas to confirm it as support because there was so much buying pressure. It got front ran. Anytime you see front running, it normally is a very bullish signal. And if we're expecting a target, something of the likes all the way up to 26 cents, we'd probably need a very bullish signal, right? Because this target is the end of the move. The end of the move I'm expecting not just for XDC, but for all of crypto is probably going to be in late January. And actually, I was looking up this on XDC real quick, just looking up some relative news here. A day ago, they were talking about XDC 841 million, or what, token unlock? Million tokens. I don't know why it says it's like millimeter. Million tokens, yeah. That many tokens, right? So that's not like ginormous in comparison, right? Because XDC's whole circulating supply right now is almost 15 billion. But that is about a billion tokens that's going to get unlocked. Not quite a billion, 85% of a billion, 84% of a billion, but it's still somewhat of a significant amount. I would expect that this unlock will stifle the price a little bit. There will be some selling anytime there's an unlock event. And I like XDC, you guys. I think it's got a bright future. I think it's going to grow a lot, but facts are facts. Anytime there's an unlock event, I don't care if it's a stock, I don't care if it's a crypto, I don't care if it's like whatever it is. Anytime there's an unlock event, there's selling pressure. There always is. So being that this is supposed to happen February 5th, we might sell off in anticipation of this event, right? Normally with bullish news, you hear buy the hype, sell the news. This could be one of those sell the hype, buy the news events potentially. I could see us topping off before the 5th of February is all I'm saying. And right before the 5th of February is the 20th of January, which is when Trump gets inaugurated, which is kind of around the time that I think most cryptos will top off. I think we're going to move up until then. Okay. Back to the task at hand. We're trying to make sense out of this high. First, we had to make sense out of this low. It makes sense, and it's really bullish. It's a really bullish low. I think that's your low. If you can get today to close, if you get any day to close above this, the 236, it solidifies this as the low. Essentially, there's always a chance it could go down, but it would basically solidify that as the low when you get above the 236. So 7.732 cents is the goal for you to close above today. Not only would that be a daily close, but that would also be a weekly close as well. So that'd be a good look. Now that we've made sense out of the low, let's make sense out of the high. So assuming that's the low, because you have to know that that's the low in order to measure this, right? Because what's the point of measuring this fib high to low if we believe it's going to go lower, right? It would give us different targets. There'd be no point. So now that I'm pretty confident that's the low, you're finding support at previous areas of resistance, and you front ran your 382. I'm pretty confident that's your low. High to low here, your next target area. Look at that, man, all the way up to your double golden extension, the 2618. Now the primary target zone is the 1618 to the 1272. The secondary zone is the 1886 to the 2618. Oftentimes you don't look for the secondary zone immediately, but there is a caveat, and I will say it's very common with smaller fib ranges to see deeper extensions, and that makes sense, right? I feel like that makes sense. If we look at this here, right, if I draw a tiny fib range here, high to low, it makes sense that on this fib range you might go all the way up to your 2886, right? Where if I draw a more kind of grandiose fib range, something that wasn't this tiny little thing, but it was more of like a cycle high all the way to your bear cycle low, stuff like that, right? Then it makes sense that it might be harder to see these deeper extensions. Okay, that's all I'm getting at. So with this kind of relatively small consolidation phase here, I think it's completely suitable, even exceptional, to expect the secondary zone to be where you top off at. So this makes sense. 2618, you could, again, it's that white line is the measure move. You could fall just short of that, right? You don't have to hit it, but hey, it's right there. 2886, the one that I just drew before, you actually topped off right at your 2886. Maybe that's where you top off now. Anything from 25 cents to 29 cents, right? We had the 26-cent line specifically based on the measure move, but now we have a range, which I like ranges more because they're less disappointing, right? It's if you have a line, it's like, oh, you're just short of it, well, we have to wait for the line to hit, but then it dumps. Oh, here's a line. Oh, it just broke the line, that means it's going to the moon. When oftentimes it's like, no, if you have a line, you're more likely going to find resistance around it. You're miraculously lucky if it just finds resistance right at a random line you draw. So I don't like lines personally. I like ranges. And I think what we've just established, we can get rid of this line. That's based on the measure move. We can get rid of that and we can establish a range, which I think would be, based off of your measure move there, would be something between your 2618 here and your 2886 here, something between about 25 cents and 28, let's just say 29 cents. Okay, so that's your potential high by the end of January. That's what I'm thinking. At the lowest, let's just say at the lowest, what I would expect by the end of January, you're at 7.8 cents now. The lowest I would expect would be the primary target in your secondary target area, which would be the 1886 at 17 cents. Realistically, I would, and that's like pessimism, right? Pessimistically, 17 cents. You're at 7.8 cents now. The most pessimistic outlook I can give you would be by the end of January, you're at 17 cents, okay? Well, I mean, maybe I could go more pessimistic if I wanted to talk about the downside, but I don't think it's going down. Right? We established that that's probably the low, and there's more reasons for that too, besides what we've already gone over, right? If you look at this, actually, just real quick, I'm going to get distracted for a second. You know, you've got lower lows here on your daily, just like consistently lower lows, right? It's some of the lowest lows on your RSI that you've seen since November, right? Certainly lower than this low over here, but all you've got is higher lows. All that was a higher low. That's a really bullish thing. When you cool off in your RSI, but you're not cooling off in your price. You did cool off in your price, but to the effect of like something that's at a dramatically less significant effect than what you did in your RSI. When you do stuff like this, it really allows you to grow a lot more, right? When you get into these overbought zones, you get overheated. You can't grow that long. You can't be overbought forever. So when you cool off like this, it gives you an opportunity to run up first, break this high before you even get into these hot zones, and then you can maintain it for a little while and continue to run from there. But just an idea there. I want to bring this back up. What was I saying? I was going to say 20 cents could be the next target, 21, but I really do like that 25 to 28 cent area. I'm going to delete these fibs here. We're going to run with one more thing and then probably call it there. Let's see if we can make sense out of this area through another means, right? So we made sense out of this on the measure move. We made sense out of this on the high to low fib extension, right? Made sense out of it there. Let's see if we can make sense out of it with a little bit more of a significant fib extension, right? Maybe this one here, from an overall high to low here. Let's see what we got. The golden extension itself, man. The golden ratio. The 1618, right? You could go just above it. This right here, looking at this fib, it makes me more inclined to believe that you don't see 28 cents, but you probably do stop right around 25 cents, and maybe just below. Maybe just below it could be, right? Or just above even. But if this white line, these white lines, if this was a range, this makes me think you'll probably stop on the bottom half of that range, right? So maybe something at like 26, 27 cents or lower, right? If your bottom is 25 cents, your top is 29 cents, then right in the middle is 27 cents. Maybe 27 cents to 25 cents is what I would expect. 27 to 23 cents maybe should be a better appropriate target there. And then one last thing, I just want to see overall high to low here. Nothing lining up there, but that's fine. You do have the 1886 lining up with this 1272, yeah. And man, the sky's the limit as far as potential for the rest of the cycle, because again, this is just the end of January that we're talking about, right? When we're talking about this 23 cent to 27 cent zone. That's my final prediction, by the way. We're at 7.8 cents now. The lowest I could see you going to is 17 cents, right? That's what we established earlier. And then most likely, I would say between 23 cents to 27 cents, and probably more likely between 23 and 27 cents. I think you're closer to 27 cents than you are to 23 cents. That's my assumption. I don't think you go lower, but these are end of January targets, right? As far as end of cycle targets go, I don't know, man. You're at $1.15 billion right now. XDC has been around for quite a while. Actually, it's been around longer than this, right? Back when it was XFIN. Let's just see. This thing's been around since 2018, so it's been around for a long time. Something like this could absolutely see an over $100 billion market cap. It absolutely could, and I think it will. It's one of the coins, one of the handful of coins that's actually iOS verified or validated or whatever. So I think that gives it a real premise to kind of for success in the world, right? We'll see. We'll see, but 1.16 billion right now. If you were to see a 100x from here, that would give you a $115 billion market cap. I could see that happening. XDC's been around since 2018. It's remained viable. No serious flaws. It's only gotten better. It's only gotten more and more, like incredibly more bullish as the time has gone on, specifically over this past like year and a half period. I could see this thing being worth over 100 billion. It could be worth over 200 billion, man. And with that potential, yes, is this coin 100xable? Absolutely, it is. But where's its high going to be by the end of the cycle? I don't know. Your guess is as good as mine. If I really had to guess, let's just see. Because what do we have? Bitfinex is the one that has the all-time history, right? So I trust this chart the most. Let's look at this high to this low here and project out. First, actually, maybe we should take this high and go to this low and project. You went all the way up to just above your 1414. Okay, cool. But also a lot deeper of an extension there. 1618 lines up with the 1272, so you probably do find resistance at some point around 37 cents. 2618 all the way up there with the 2272 at $8.20. What is that from here? Look at that. You guys. I don't know how many people are calling for this on YouTube. Maybe this is one of the lower calls. I don't know, but I really think XDC stands a chance of breaking above $8 by the end of the cycle, right? 820 to 873. I think I'm remembering that from my last video, but it makes sense, right? This relative cycle high to low, all the way up to the 2618, the grand, like the very first high to low that you had, all the way up to the 2272, lining up very well with each other. It makes sense to me, man. It makes a lot of sense. But time will tell. Certainly, if we take away this fib, certainly I would expect, just based on how you're acting here, that you would at least go to $1.29. But if you break above $1.30, you break above that, there's a lot of reasons to believe that you won't stop until $8, right? I don't know what else to say, guys. I think I've said everything I need to say. XDC looks very, very bullish. On top of everything I've said, you have a very nice bottoming pattern here, right? This is what they call an Eve and Adam pattern, okay? Eve and Adam. You can look it up if you want, Eve and Adams. There's Adam and Eves. There's Adam and Adams. There's Eve and Eves. The patterns that are the most bullish of these, and they're oftentimes double bottoming patterns. The patterns, and this is technically like a 1-2 triple bottom, by the way, which is pretty bullish as well. But I would definitely say this is an Eve and Adam pattern. Any pattern that ends with an Adam, it tends to be stronger, right? Any Adam and Eve pattern, any pattern at all that's a double bottom like that, it's a very powerful signal. But when you get these Adams out, the V bottoms out, they're more powerful signals. And just everything we're seeing, right? Anytime I brought that up where we're talking about the more powerful signals, this would be a more powerful indication. XDC is providing that. So I would expect that this move right now, as you're progressing higher, it just continues, man. It really does continue. By the end of January, we'll end the video there. By the end of January, 17 cents is the minimum target. Realistically speaking, I'm expecting anything from 23 to 27 cents, probably closer to 27 cents than 23 cents. By the end of the cycle, we're looking at targets above $8, $1.20 at the least. You're at 7.9 cents now, XDC. Looking like you found your low and looking like you're ready to go, man. I don't think that the move has stopped here. I think you're moving up. You're in the midst of this move that's going to take you all the way up to like something up here. We'll see how it goes, man, by the end of January, right? But that's all I got for you guys. If you like the video, hit that like button, subscribe if you want to see more content like this. Thank you all for being here. I'll see you on the next one. Take care. Bye.